With a year-end target of 7750 for the S&P, our next guest is, yes, bullish on stocks, but thinks that tech and AI-adjacent names will be the ones to power this new market to record highs again. In other words, what has been working is going to work still. Julian Emanuel now is the head of equity derivatives and quantitative strategy over at Evercore ISI. Julian, the 7750 is bullish. Take us through the reasons why, and it seems mathematically like if it's big tech that's doing it, it maybe stands to reason it'll happen.
Yeah, well, so what's interesting to us is that to start the year, the events in December around one particular name that had, debt issues and credit default swap spikes caused the sentiment around the AI theme to get a little bit more cautious. And we find ourselves in a situation where actually our view that the AI names and themes that have led for the past 3 years in communication services, in consumer discretionary, in infotech, that they're going to continue to lead. It's at a consensus. And frankly, I wasn't expecting to feel that way. And I'm very happy to feel that way. But if you think about how bull markets evolve, there tends to be a capital markets spike. I wouldn't necessarily call it a frenzy, but much more vigorous capital markets activity. That's percolated in the last few months, but as a percent of overall market cap, it still has further to go. And the historical tendency is that capital markets are led by the names and themes that got you here in the first place. And we think that's the AI trade.
So talk about that, where some feel a little frustrated that it's not, the memory stocks have been great. What about NVIDIA? What about some of the, Mag 7 stalwarts? What are you looking for there?
Well, if you look at it over the course of time, and actually the broader NASDAQ has gone sideways for 4 months, what we're going to be looking for is how these names respond to earnings season reports. We know one thing, they're going to beat. The beat rates have been very high throughout this entire cycle. And one of the things that with the VIX trading around 14 gives us at least a little bit of pause in the near term is the fact that expectations around earnings season are very, very high. We think when the full year comes around, high single digits is going to be sufficient to drive these names. But what we're going to want to see is how the hyperscalers, how the enablers talk about the future. There doesn't seem to be a peak in, the appetite for CapEx. And obviously, the announcement this morning by one of the hyperscalers that they're acquiring more power capacity certainly bodes well for the runway into 2026.
Right. So we're looking at the semis, for instance. Those came out to an all-time high, which is typically a bullish sign. What worries you? I mean, is it rates? Is it, if growth is a little too strong? How does the Fed fit into all of this?
Well, so actually, if anything, it's our view that the Fed may be overstimulative. That's the potential. We see a 30% chance that you actually get a bubble, which we would define as 30 times $300 in earnings, or 9,000 on the S&P 500. But the near-term worries are one of these, again, is a sort of where the VIX is. Given the geopolitical backdrop, Brian just talked about the complexities surrounding this visit to the White House right now. Risk is probably underpriced in the near term, but longer term, our biggest concern would be a move higher in long-term rates as something that would be a punitive discount factor. But that hasn't happened until you get to 450 or 475 in the 10-year yield, and that's still a ways off in our view.